Hello everybody, this is Lara at pureelliottwave.com with a free analysis for you. I'm going to update my account of Nasdaq. It hasn't invalidated my last count, but there's a lot of downward movement and I think it's probably about to invalidate how I previously labelled it on the 17th of August. It's time to have an update. I've got a new target for you. It looks like the bear market may be coming to an end soonish and my target for support is 9099.33. Elliott wave analysis first, classic analysis last. The quarterly chart level to put this into the bigger picture, because Elliott wave is fractal, you have to put each time frame into a time frame higher and then look at subdivisions on a time frame lower. My bigger picture wave count for Nasdaq sees a supercycle degree first wave over here in 2000, the dot-com crash, a supercycle degree second wave, and there a supercycle degree third wave began with cycle 1, 2 and 3 complete. We're looking for the end of cycle 4. If it ends up being deeper than I expect, look out for it to find support at the lower edge of this channel. I draw this channel on a semi-log scale on a quarterly chart from this high to this high, place a copy on this low. Cycle wave 4 may not move into wave 1 price territory below 2861.51, but if price were to break below the lower edge of this channel probably on the weekly chart with a full weekly candlestick below and not touching this trend line, I would probably discard the idea that the bear market is cycle degree and I'd consider super cycle wave 3. Well, actually I would have to consider it's at cycle degree. I'd have to move this all down 1 degree and see one and a big second wave correction unfolding, and next area for support would be the lower edge of this channel. This is a best fit channel. Let's take a look at the monthly chart. We're going to look at the end of cycle 3. We're going to look at all of cycle 3 actually. Here's cycle 1, cycle 2 is zigzag, has a really good subdivision. Cycle 3 has a really good fit as an impulse, primary 1, 2, 3, 4, 5, 2 and 4 look reasonably proportionate. 4 is more brief than 2 by a few months. That's absolutely fine. Fourth waves are often more brief than second waves, particularly in markets like Nasdaq with stronger volatility. Cycle wave 4, we're looking for the end of it now. I have a target for you. We'll get to that at the daily chart level. If it does continue lower, here's the lower edge of that Elliott channel. Draw it from 1 to 3, place a copy on 2. Cycle 4 may not move into wave 1 price territory. Let's take a look at the weekly chart, this high here of cycle 3. Here's the end of cycle wave 3 and the start of cycle wave 4. I have cycle wave 4 labelled as a double zigzag. This has a really good fit. The first zigzag in the double is labelled primary wave W. It subdivides 535 and it's labelled A, B, C. The double is joined by a 3 in the opposite direction labelled primary wave X, labelled A, B, C. This is an expanded flat correction. At lower time frames it subdivides 3, 3, 5. From this high to this low, this downward movement really does look like a 3-wave structure, doesn't it? And so seeing an expanded flat in this position has a really good fit. This is the end of X and the start of Y. The second zigzag in the double is labelled primary wave Y. It is labelled intermediate A, B, C, and it must subdivide 5, 3, 5. I have intermediate A ending over here because at the daily chart level it has a really good fit. My target is for intermediate C to reach equality in length with A at 9099. Let's take a look at this at the daily chart level, where the end of intermediate B, actually I think we're going to look at all of primary Y, the end of X, intermediate X and the start of Y, intermediate Y subdividing as a primary Y subdividing as a zigzag, A, B, C to subdivide 5, 3, 5. Now minor waves 4 and 2 are disproportionate, but I've labelled it like this because this is how the subdivisions fit best. I'm seeing intermediate A as minor 1, 2, impulse for 3 has a perfect fit, expanded flat for 4 gives alternation with a zigzag for 2, but it's longer lasting than 2, and minor wave 5 has a perfect fit as a 5-wave impulse. Minor 4 fits as an expanded flat, A, B, C. I could put labels here for A as well. This looks like a 3-wave structure, doesn't it? B certainly could be a 3-wave structure, A, B, C, and C, importantly, looks like a 5-wave structure from this low to this high. This upward movement has a really good fit as a 5-wave structure, so that looks like wave C. of an expanded flat. So there's alternation between the flat of 4 and a zigzag of 2, and the subdivisions fit well. Intermediate B fits as a zigzag, A, B, and an extended wave C, 1, 2, 3, 4, 5, and an intermediate C may only subdivide as a 5-wave motive structure, so that's either an ending diagonal or an impulse, and so far a lack of overlapping strongly suggests the more common impulse for intermediate C, subdividing 5, 3, 5, 3, 5, labelled minor, 1, 2, 3, 4, 5. Minor wave 4 could be over here. It could move sideways for a few days. It could move a little bit higher. It may not move into wave 1 price territory above 11,471.50. What this invalidation point means, this is really important. In the very short term, if we see a new high by any amount at any time frame above this price point, then it would be more likely that intermediate C, primary Y, and so cycle 4 could actually be over, because 4 can't move into 1 price territory. So a new high above this point tells us upward movement can't be a 4th wave correction within intermediate C, and so intermediate C would have to be over. At the weekly chart level, prices made a new low on a closing basis, but not a lower low on a price extreme basis. We can't draw any conclusions about this weekly candlestick because it's only about halfway through. This is the current incomplete week. We can look at the last 3 completed red weekly candlesticks, and they do overall have heavier volume. Volume is pushing price lower, at least for the short term. That's bearish. Support 10,750, resistance 11,750. On balance, volume has no current range. It's making lows with price on a closing basis. There's no divergence. ADX again indicates an upward trend. This is a look for the end of a movement. We see the 3rd wave gets extreme, ADX declines for a 4th wave, and it starts to increase, showing a trend again for the 5th wave. This is not a strong signal though. Not a particularly strong bearish signal. That's this kind of look. When ADX is at a low level and rises up from below both DX lines and starts rising, reaches 15 and above, that's a strong signal, the strongest signal ADX can give, and that's normally what you see toward the beginning of a trend. This look is normally what you see toward the end of a trend. So this has a normal look and fits the Elliott wave count. There is, on a closing basis, a little bit of bullish divergence here, but I would rather wait to see this weekly candlestick complete and a pivot low form before I would note that bullish divergence. Just so you know, I'm aware it's there, and that's why I'm not going to note it. I've learned the hard way to wait for pivot lows and highs to form before looking at corresponding points with RSI and price to identify if there is any divergence, bullish or bearish. I've learned the hard way that eliminates some instances where you see divergence and then it just disappears. So wait for those pivots to form before you try and identify divergence. My difficult lesson I learned there. So there's a little bit of really weak bullish divergence down here, and now again I'm drawing these lines on price across lows because it's more visually intuitive, but in order to identify divergence I'm looking at closing prices on those candlesticks. There is a very, very little bit of rather weak single bullish divergence here that could absolutely be resolved now by this counter trend bounce, and the bear market absolutely could be resuming for Nasdaq. There wasn't any divergence between price and money flow index at the low, and stochastics again oversold. ATR overall flat as price falls, hasn't caught up with the resumption of the bear market if that's what's happening at the weekly chart level, but it has at the daily chart level. ATR is now showing some increase at the daily chart level. At the daily chart level, there is some bullish divergence between price on a closing basis and money flow index. It's single and it's really weak. It really is a little bit too weak to really note. There's very slight short-term bullish divergence between price and RSI, between these points on a closing basis. It's so weak, I wouldn't give it much weight in this analysis, and it absolutely could be resolved by a couple of days upward movement now anyway. For the really short term, there is some support for this last completed session from volume to push price higher. This gap so far just remains open. We can't really draw much conclusion on that though, because this current session is incomplete. There's still a couple of hours to go. If it remains open, look out for it to provide support in the very short term. If this gap is closed, look out, that would be a rather bearish signal. It would then be a pattern gap, and I'd expect more downward movement, at least to support, which is about 10,600 now. On balance, volume is essentially flat as prices moved lower here. From this close to this close on those sessions, on balance volume is essentially flat, so you could possibly read that as really weak bullish divergence. It's just, again, it's just too weak. I would really want to see some more strong bullish divergence develop before I tried to call the end of this bear market. It just doesn't exist at this point. And there's also no bullish candlestick reversal pattern. There doesn't have to be. But if we start to see some bullish divergence between price and RSI and or price and money flow index, and then we see a bullish candlestick reversal pattern and the Elliott wave structure is complete, if that all lines up, then I would say that the probability of the bear market being over for Nasdaq would start to increase. That is not the situation right now, and so I expect it's probably not over. Assume the trend remains the same until proven otherwise. That's all from me with an updated Nasdaq analysis for you. I hope everyone's having an awesome day.